What if your currency is next? Imagine waking up one morning to discover that the money in your wallet has become virtually worthless. History has shown this nightmare playing out again and again. When once mighty empires or economies crumble, their currencies often collapse in the wreckage. This isn't just an ancient warning. It's a pattern. From Rome to Weimar Germany to modern Zimbabwe, the story is chillingly similar. Unchecked money printing leads to debased coins, runaway inflation, and social collapse. In each case, everyday people learn the hard way that fiat money depends on trust. If that trust is broken, even the grandest empire can see its currency die. In the late Roman Empire, the citizens first felt the pain of debasement as small coins turned to near copper, and prices soared. At its peak, Rome's silver denarius, introduced by Augustus at 95% purity, had been diluted to around 50% silver by Emperor Caracalla, AD 211 to 217. Even the emperors admitted the truth. Septimius Severus urged his heirs to enrich the troops, ignore everyone else, and Caracalla declared, "Nobody should have any money but I, so that I may bestow it upon the soldiers." In practice, this meant minting vast amounts of coin with almost no silver. By mid-3rd century, prices were spiraling out of control. As historian Joseph Peden notes, within a generation the basic silver currency was collapsed by its progressive debasement, so that financial chaos ensued. Ordinary Romans saw their savings evaporate. Farmers and traders demanded more and more coins for the same goods. Eventually, a loaf of bread could cost a wheelbarrow of coins. The once stable Roman economy became paralyzed by inflation and distrust in money. With soldiers clamoring for higher pay and taxes crushing the populace, the social fabric tore at the seams. By the time Rome fell, Western Empire AD 476, its currency had long since lost all credibility. A more modern echo came in Weimar Germany after World War I. Bankrupt and burdened by reparations, the government began printing money on a massive scale. By 1922, hyperinflation was underway. Prices were up by 700% over a few months. Ordinary prices became astronomical. By late 1923, a single US dollar cost billions of marks, and desperate people were often paid twice a day just so they could rush out and spend before their wages lost value. Anecdotes from the era capture the madness. A wheelbarrow full of money could not buy a newspaper. Students used banknotes to light cigarettes. Businessmen hoarded coins under mattresses. Shopkeepers stopped restocking shelves because by the time the stock arrived, the price had doubled. Even farmers refused to sell grain for anything but hard currency. In the streets of Berlin and beyond, scenes of chaos emerged. Food riots broke out, pensioners starved as savings vanished, and law enforcement struggled to keep up. Socially and politically, Weimar hyperinflation was devastating. Historian Backhouse notes that it impoverished millions of citizens and paved the way for the rise of the Nazi Party. Families who had played by the rules suddenly found their life savings wiped out. Some business owners, who had cut costs to survive, lost it all overnight. The middle class, long accustomed to stability, became cynical and desperate. Meanwhile, extremist ideologues like Hitler exploited the despair, promising to restore pride and prosperity. In this way, a currency collapse helped undermine democracy itself. Weimar taught a harsh lesson. When money fails, society fractures. The lesson echoed from the grand halls of ancient Rome to the streets of 1920s Berlin. Even today, currencies can still implode. Zimbabwe's great collapse in the 2000s brings the story up to the minute. What started as an economic crisis fueled by political misrule turned into a literal currency disaster. By 2008, the Zimbabwean dollar was in freefall. Official annual inflation rates hit an astonishing 231 million%. In practical terms, prices doubled almost daily. The Reserve Bank kept printing higher and higher notes, including a $100 trillion bill, but it changed nothing. The Zimbabwe dollar had become a laughingstock, as one finance minister quietly admitted. In January 2009, the government formally gave up on its currency. Businesses were allowed to transact in multiple foreign currencies, US dollars, South African rand, etc. In practice, the Zimbabwe dollar was already dead. Shops, schools, and landlords had long demanded payment in stable notes, and street vendors often refused local cash entirely. For ordinary Zimbabweans, Survival meant ingenuity. Landlords listed rents in US dollars, often hundreds of dollars for a cramped flat. Civil servants, whose paychecks were worth next to nothing, kept a corner of their offices stocked with basic goods to barter. Wives and daughters ran currency exchange side gigs, grabbing any US dollars they could and selling them at a small profit. Fuel and medicine vanished from official outlets, reappearing only on a black market at exorbitant prices. For most families, the collapse was catastrophic. Hospitals ran out of medicines, schools closed for lack of fuel, millions went hungry. One child in Harare described wearing a single thin shirt to school because her family couldn't afford a uniform or shoes. These stories might seem extreme, but Zimbabwe's hyperinflation was beyond anything seen in decades. By mid-2009, recognizing the reality, the government abandoned its currency entirely. Prices were quoted in dollars, and the once proud Zimbabwe dollar became irrelevant. In short order, citizens moved on to hard assets or foreign notes just to cope. Zimbabweans in the 2000s learned what Romans and Germans learned long ago. When money fails, life becomes a scramble for survival. Is the pattern done? Not at all. Today's global economy shows eerie parallels. Central banks have printed trillions since the 2008 crisis and 2020 pandemic, pushing public debt to historic highs. In the US, for example, the national debt has surpassed $37.80 trillion, nearly 100% of GDP, with interest payments over $1.2 trillion a year. One analyst bluntly warned that America is going broke slowly. Meanwhile, inflation has topped levels unseen in decades across many countries, with similar pressures in Europe, Japan, and elsewhere. That has shaken confidence in fiat money. Investors are responding. As of 2025, both gold and Bitcoin are surging to record highs. A recent market analysis even dubs this the debasement trade. People are buying assets that can't be printed when paper currency looks shaky. By October 2025, gold topped $4,000 an ounce and Bitcoin approached $125,000, on fears of persistently high inflation and a weakening dollar. Economists point out that fiat erosion is real. As one report notes, the US dollar fell roughly 9 to 10% in just 6 months in 2025 amid ballooning deficits. Even central banks are wary. Many are quietly diversifying reserves into gold and other currencies. Digital currencies add another twist. Cryptocurrencies were born as a response to distrust in traditional money, and their rise reflects unease. For perspective, Bitcoin, often called digital gold, has seen unprecedented gains as well. At the same time, governments are experimenting with their own digital coins, CBDCs, which many fear could amplify central control over money. Globally, savers are eyeing alternatives. Some hedge with crypto or commodities, others stash dollars or euros. The key difference is that modern information spreads these anxieties fast. A panic in one country can ripple worldwide via finance and media. What does this all add up to? In short, we have the ingredients of historic collapses. Central banks worldwide have pumped unprecedented liquidity and run up record debts, echoing Rome's coin presses and Weimar's paper presses. Inflation and public mistrust are rising. The reserve currency, the US dollar, shows strains similar in spirit to prior fiat collapses. Analysts warn of renewed volatility. Ray Dalio and others recommend holding gold or Bitcoin as a hedge, just in case. In real terms, many people feel poorer under high inflation or face harder choices just like in Zimbabwe. Thus the lesson is clear. The same forces that dissolved empires' currencies centuries ago are active today. History isn't destiny, but it's an alarm bell. When we see hyperinflation, soaring debt or currency distrust, the ghosts of Rome, Weimar, and Harare are there to warn us. The takeaway for viewers is not to panic, but to pay attention. Money's value comes from trust, and history shows trust can vanish fast. We can't stop governments from making mistakes, but we can protect ourselves. Diversification, holding a little gold, equity, foreign assets, or even crypto, and living within means remain prudent shields. Crucially, understanding the patterns helps. If news reports say inflation is above target or public debt is surging, remember what happened when that happened before. In the end, the rise and fall of empires teach a clear lesson. Nominal wealth is fragile, but but knowledge is enduring. By studying these cases, from Roman soldiers guzzling debased denarii to Zimbabwean mothers bartering for maize, we become better equipped. We learn to spot dangerous trends early, to question easy money, and to manage our finances for the long term. The vaults of vanished empires hold many treasures of wisdom. One is that currencies live and die by confidence. If today's world ignores that truth, the next collapse could be closer than we think. The best protection is simple. Stay informed, diversify wisely, and never take money's value for granted. History doesn't repeat, but it does warn. Rome ignored it. Weimar dismissed it. Zimbabwe lived it. Each time, people believed their money was different, until it wasn't. So the question isn't if another collapse could happen. It's whether we'll see it coming this time. If this story opened your eyes to how fragile money really is, take a second to like this video. It tells the algorithm this truth still matters. Share it with someone who thinks their currency is untouchable. And subscribe if you want to understand how history, power, and money shape the world you live in. Because the only thing more dangerous than repeating history is forgetting it.